Bank of Ghana's open policy spurs fintech growth. Also in this bulletin, Finance Minister set to present 2026 budget on the 13th of November, and later new oil revenue law raises transparency concerns. My name is Stephen Freeman. To our very first story, the Bank of Ghana's open regulatory approach has been a key in driving the country's fast-growing fintech sector and digital payment transformation. That's according to Riku Asari, the Deputy Director of the Fintech and Innovation Office. Speaking during a high-level breakout session at the DC FinTech Week 2025 in Washington, D.C., Mr. Asari said the central bank's shift from a command and control mindset to an enable and support model has encouraged innovation and market-led development. Mr. Asari also noted that Ghana's payment reforms began with a recognition that slow systems were stifling growth. The Bank of Ghana responded by convening commercial banks to set up an entity to facilitate faster payments, laying the foundation for the Ghana Interbank Payment and Settlement Systems (GIPSS) and subsequent real-time transfer platforms. Well, that decision, he said, marked a turning point in Ghana's financial infrastructure. The deputy director emphasized that central banks must not only regulate but also invest in the infrastructure that enables innovation. He added that the BoG's regulatory sandbox, data initiatives, and digital payment policies are designed to encourage experimentation while maintaining financial stability. Away from that, Ghana is today celebrating 60 years of the Ghana cedi, the nation's official currency, with a national event at the Accra International Conference Center. The ceremony, themed 60 Years of the Cedi, Our Money, Our Pride, is being organized by the Bank of Ghana (BoG) to reflect on the currency's history, its economic impact, and its role as a symbol of sovereignty and national identity. Ahead of the event, the BoG's head of currency management, Dominic Owusu, urged Ghanaians to handle the cedi with care, warning that damaged or dirty notes increase replacement cost and hinder banking technology. He also cautioned that mishandling the cedi ultimately weakens the economy, since Ghana relies on foreign exchange to print its currency. The celebration will also feature exhibitions, lectures, and cultural performances tracing the cedi's evolution from the pre-independence era to its current form. A nationwide campaign has been launched to promote currency handling and renew public pride in the Ghanaian cedi. Well, let's stay a bit longer on the Bank of Ghana, because it has issued a stern warning to Ghanaians about the careless handling of the national currency, highlighting its negative impact on the economy and the country's reputation. Director of Head of Currency Management, Dominic Owusu, once again explained that actions such as crumpling, tearing, and soiling of the cedi notes indirectly leads to currency depreciation and impose extra financial strain on the nation. In a media interview on Monday, Mr. Owusu noted that Ghana spends substantial foreign exchange to print currency notes overseas, so damage caused by mishandling results in direct economic losses. He further stressed that improper treatment of currency not only raises replacement costs, but also hampers banking operations. Modern currency counting and sorting machines often malfunction when processing dirty or damaged notes, causing delays and inefficiencies in financial institutions. Mr. Owusu also highlighted cultural habits such as folding or crumpling money when giving it as a gift as significant contributors to the problem. Well, still on matters related to the central bank, the Bank of Ghana once again has rolled out new anti-money laundering, countering, and financing of terrorism and proliferation financing, also known as the AML, CFT, and PF guidelines, aimed at tightening oversight and ensuring stronger compliance across the financial sector. The move, according to the central bank, forms part of ongoing efforts to fortify Ghana's financial system against illicit financial flows and align the country's practices with international standards. The revised September 2025 guideline published by the central bank introduces enhanced due diligence procedures for the banks, specialized deposit-taking institutions, and other regulated financial entities. Institutions are now required to identify and verify the identities of their customers more rigorously, assess risk exposure, and report suspicious transactions promptly to the Financial Intelligence Center (FIC). It also places greater accountability on boards and senior management to oversee compliance frameworks and ensure continuous staff training on anti-money laundering practices. The BoG emphasizes that the guidelines seeks to deepen risk-based supervision and prevent financial institutions from being used as conduit for money laundering, terrorism financing, or proliferation-related activities. It also incorporates new provisions on politically exposed persons, beneficial ownership transparency, and the use of technology in monitoring financial transactions. By strengthening Ghana's AML-CFT regime, the Bank of Ghana hopes to enhance financial stability, investor confidence, and the country's global reputation as a safe and transparent financial hub. The central bank says the new guidelines aligns with the Financial Action Task Force recommendations and supports national efforts to meet international compliance benchmarks, particularly ahead of upcoming peer evaluations. The bank has urged all financial institutions to familiarize themselves with the new framework and ensure full compliance, warning that non-adherence will attract regulatory sanctions. Moving on, sources close to the Finance Ministry has revealed that Minister Dr. Ato Forson is expected to present the 2026 budget statement and economic policy to Parliament on 13th of November, pending parliamentary approval. If approved, this date will mark the government's first major budget presentation since its victory in the 2024 elections and nearly 9 months of steering Ghana's economy. According to Public Financial Management Act, the Finance Minister, acting on behalf of the President, is obligated to present the national budget to Parliament no later than 15th of November each year. This legal requirement ensures timely financial planning and legislative oversight. The Finance Ministry has reportedly completed multiple rounds of extensive stakeholder engagement and industry consultations to finalize the policies and programs that will shape the 2026 budget. These efforts are aimed at incorporating diverse perspectives and addressing pressing economic challenges. Some Ghanaians expect the upcoming budget to address the implementation of critical campaign promises such as the Big Push Initiative and the Nkokon Kitinkiti program, among other flagship projects of the government. Furthermore, the budget is anticipated to provide detailed measures on managing the economy after Ghana's planned exit from the International Monetary Fund program later in 2026. In some more business stories, Ghana's government has changed how the country's oil money is shared, a move that could affect transparency, infrastructure development, and education funding. The new Petroleum Revenue Management Amendment Act 2025 removes guaranteed oil revenue allocations for key programs and oversight bodies, including the Public Interest and Accountability Committee, the Ghana Infrastructure Investment Fund, and the Free Senior High School Policy. Under the old law passed in 2011, part of Ghana's oil wealth, known as the annual budget funding amount, was set aside for specific national priorities. The new amendment, however, treats the fund as part of the regular national budget, meaning that the Finance Ministry can now decide how oil revenues are spent each year. Analysts warn the change could weaken independent oversight. They say PIAC, the committee that tracks how oil money is used, may struggle to remain fully independent without guaranteed funding. The amendment also removes direct support for major infrastructure projects, including the Agenda 111 Hospital Program and the Kotoka International Airport Terminal 3, as well as the free SHS policy, which has benefited millions of students. Although government officials says the programs will continue, critics argue that linking them to the general budget could make them vulnerable to political shifts. The Finance Ministry said changes are meant to improve flexibility in managing public funds. However, watchdog groups insist the move risks undermining transparency and long-term development planning.